Toronto real estate prices near crash levels. Rents plunging and investors panicked. In October 2024, real estate in Greater Toronto continued to cool, with prices on a downward trend according to a November 6, 2024 article in Better Dwelling by Daniel Wong. Toronto Regional Real Estate Board data showed that the cost of a typical home in the area fell back to 2021 levels, rolling back 3 years of gains. This decline puts the benchmark home price for the region at around $1,060,300, a significant drop from the peaks seen over the past decade, where values nearly doubled. In fact, the current price drop reflects almost half the value of a similar home a decade ago, indicating how dramatically the market has shifted from its prior rapid growth phase. The recent drop in home prices isn't isolated, instead, it builds upon a series of declines. In October alone, the average price decreased by 0.8%, or $8,400. Compared to October of the previous year, prices have fallen by about 3.3%, or $36,700. This steady drop pushed the benchmark value down to its lowest since September 2021, disrupting what many investors had come to expect in Toronto's resilient real estate market. Some analysts believe the market could be inching towards stability, pointing to signs of firming in the annual growth rate of Toronto home prices. For 3 months now, the rate of decline has been less intense compared to the sharper drops earlier in the year, particularly in July, when declines reached 5%. While some take this moderation as a hopeful sign, the market remains volatile, and monthly decreases are still considerable. The moderation in year-over-year decline rates mainly suggests that the size of each drop is smaller than in previous years, but it does not signal a return to price growth. The decline's magnitude has also prompted talk about a technical crash. Since March 2022, the market has seen a 19.3% drop in benchmark prices, totaling a $253,500 loss. If it hits the 20% mark from the peak, this could technically be considered a crash, defined by a steep, sudden correction from historic highs. Looking back over the last few years, today's values are far from what they once were, indicating how rapidly and substantially the market has cooled. Current price declines may be influenced by potential changes in interest rates. Some buyers may be re-entering the market in anticipation that rates will decrease, while existing rates offer more stability. However, despite these smaller gains, Toronto's home prices are still largely beyond the reach of typical households, with the market highly dependent on investors rather than owner-occupiers. Many of these investors were motivated by the promise of increasing rents, which supported high property valuations. However, anticipated reforms to Canada's immigration policies could lead to a drop in rental demand, creating another challenge for investors. If rents decline, the earlier narrative supporting high prices may change, potentially leading investors to pause and re-evaluate their strategies. In Ontario, asking rents for one-bedroom apartments have seen a sharp decline, especially in areas around Greater Toronto. In another November 8, 2024 article in Better Dwelling, Daniel Wong writes that as of October, Toronto's average asking rent for a one-bedroom unit dropped to $2,380 per month, reflecting an 8.7% year-over-year decrease. This decline matches that of Oakville, where rents for similar units also fell by 8.7%, bringing the average asking rent there to $2,304 per month. The alignment in rent reductions between these cities suggests a broader regional trend, not an isolated drop. This trend is significant given that many of these areas are dominated by investor-owned properties. Declining rental demand could potentially impact home prices throughout Greater Toronto, as well as the rest of Ontario, and across Canada, as rental income plays a crucial role for many investors in justifying their property values. Lower rental returns may push more investors to reconsider their involvement in the market or even prompt some to sell, which could increase housing supply and potentially place downward pressure on real estate prices overall. This shift reflects a notable change for investors, who have been accustomed to steady or rising rental returns, and may influence future trends in both the rental and sales markets across Ontario. While there are minor signs of stabilization, Toronto's real estate market faces numerous challenges that may delay a full recovery. Investors, households, and prospective buyers alike are watching to see if rates stabilize and whether changes in rental demand will impact the market's future direction. What do you think? Will prices continue to decline, or will the recent Bank of Canada interest rate cuts refuel the housing market and drive prices higher? Please join in on the conversation by leaving a comment. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.